Bharat Electronics gains over 7% on the back of strong fourth quarter numbers. Margins and net profit beat estimates. FY24 order inflows stood at 35,000 crore rupees versus the given guidance of 20,000 crore rupees. Brokerages raised the target price and earnings estimates.
And shares of Balkrishna Industries also surged on a strong showing in the fourth quarter. Margins expand by 470 basis points. Revenue grows by more than 15%. The company, though, refrains from giving any guidance for FY25.
Nifty Metals is the top sectoral gainer as global metal prices continue to surge. Copper also rallies to hit record highs above $11,000 a ton.
City Union Bank slumps as operating profits decline both sequentially and on a year-on-year basis. The slippages rise 17%, while Mahesh Rangaraman, the head of credit at the bank, resigns.
Parag Milk reports weak fourth quarter numbers. Margins slip while net profit and revenue also decline on a year-on-year basis. The stock down over 12%.
Hello and welcome to Chartbusters. I'm Nigel D'Souza. Joining me as always is Mangala Malu. Well, we'll come back after a longish weekend. Not quite actually in terms of working because we had a small session that was underway on Saturday, and yesterday obviously Mumbai voted, so some of us were on duty. But the markets, well, we're pulled back close to around 30 points. Par for the course, I would say, still holding at around the 22,500 odd mark, Mangala.
Nigel, nothing really to worry about. Let's see where we go from here. 22,500. We've rallied almost 700 points from recent lows itself. So it's getting a lot more stock specific. And in that, let's focus on KRBL. That's the stock on our radar on the back of their fourth quarter numbers. The company reported flattish sort of revenue growth coming in for the fiscal FY24 itself. Margins and net profits also declined as export curbs kicked in. Ashish Jain, who's the CFO of the company, now joins in to discuss the quarter gone by, but more importantly, the year looking forward as well. Thanks a lot, Ashish, for joining in. And exports, that remains to be a bit of a concern. I remember you saying in the third quarter that, 17 to 18% of your exports come in from Saudi Arabia. You're concerned about distribution challenges in branded export segment. And also, Iran has slashed prices by about 36%. So just wanted to know, from your overall revenue standpoint, how much comes in from exports? How much is Iran? How much is Saudi Arabia? And what's the situation there?
Sure. So first, thank you for having us. In terms of exports, we did about 1,300 crores of revenue in exports during the year. This is, of course, lower than what we had done in the preceding year. And the challenges that you had mentioned, kind of continue. Some of our key markets, we are facing distribution challenges. However, this is a matter of top priority, and we're very hopeful of addressing this, very quickly now. Now, in terms of Iran, Iran is a very large destination of rice exports from India, but it's a difficult market to access because of the sanctions that the US government has imposed on it. So we, therefore, do not sell anything to Iran as of now, but, it continues to be a large market for rice from India.
All right. Hi, Ashish. Good morning and good to see you in. This is Nigel on this side. So, revenue growth for FY24 was flattish. For FY25, you were hinting at a double-digit growth. Do you hold on to that? And what are you factoring in, both on the domestic and the exports front for FY25?
Yeah, thanks, Nigel. So, let me just give you some insight into our revenue performance for FY24. So while the overall numbers appear flattish, they under the hood have a 18% growth in our domestic revenue. So very strong growth there. This is the first year where our domestic business crossed 4,000 crores in revenue. The flattish number that you see is largely on account of exports, for the reasons that we just discussed. We hold on to our expectation that in FY25, we should see double-digit growth. And this is banked on two factors. One is continuing growth in our domestic business. And also, like I mentioned, we are hoping to address the export challenges soon. So that should also bounce back during the year, leading us to report expected double-digit growth.
So what sort of resolution methods are you taking in for the export business? You said you hope for some resolution very quickly. By when, if you could give us a sense of timeline and the measures that you're undertaking right now?
Yeah, so, this is a matter of top priority. I don't have a specific timeline, but we are hoping to address this very quickly now.
Okay, got it then. Also on the domestic business, could you give us some kind of targets, a regional rice revenue? What is the target on that front?
Yeah, so, we had started FY24 with a target of getting the regional rice portfolio to 5% of revenue. So we've crossed that I mean, the business has grown very well. While I don't have a specific target that I can share right now, but we see continuing strong growth in this business because we believe we're just scratching the surface as far as the potential is concerned.
Right. You know, there are reports that the government may consider lifting curbs on rice exports. There was news that came in one of the newspapers in the earlier part of this month itself. How much of your double-digit revenue growth guidance for this year is factoring in any sort of resolution that may come by? I mean, you did say something may happen in the exports front, but on this part, I mean, have you factored any of this in?
Yeah. So, the government sort of policy restrictions are largely around non-basmati, which traditionally is not accounted for a large share of our revenue. We opportunistically do large bulk deals when we find the commercial terms are what we like. So the target that I mentioned does factor that in, but it's not a large quantum. So regardless of the policy direction, we are hoping to meet that target.
Okay, all right. Final question then before we let you go, sir. Could you give us a sense about what kind of margin number should we be working with for this year? And also expected ad spends as a percentage of sales. What is it? And are you looking to up that number?
Yeah, so we should see the margins improving over the, over the FY24 numbers. So I don't have a specific range that I can share, but you can certainly expect improvement. That's number one. Number two, in terms of ad spend, explicit ad spend by us is done largely in our domestic business, where we typically work at 2 to 3% of revenue for our domestic business.
All right. And, just to follow up on that, I remember you wanting to diversify your revenue mix in domestic by adding some of the value-added products as well. There was the biryani masala, the biryani kit, and all these things that you're bringing out. So how much of your revenue now comes in from all of these products? I mean, what's the run rate that it has reached? And what's your target here?
Yeah, so, diversifying the domestic revenue is definitely, an idea that we've been pursuing. The first sort of salvo in that direction was the non-basmati, which I mentioned is growing very well.
Right.
The last few months saw us launching the biryani masala, which has also been well received. So you can expect continuous launch of new products in the current financial year as well. So as you can expect, these are small contributors to revenue, but I think the value that they bring in is in terms of the growth that they provide over the long term. So small numbers now, but expected to grow well.
So which is what we wanted to know. Strategically speaking, what's your, vision here from this portfolio, the non-basmati and packaged food portfolio, value-added portfolio, so to say?
Yeah, so at least 10% over the next few years. So we already see non-basmati contributing 5%, another at least 5% to come from new products.
Margin differential between the two, because it's a value-added product, you would probably be getting better realizations and margins here?
Yes, that is typically the case, but overall impact on the financials is limited because the revenue numbers are small.
All right.
All right, Ashish, always good hearing your thoughts. Wishing you well for the remainder of this fiscal, and we look forward to chatting up with you. As you said, you're expecting the domestic business to continue the momentum that we've seen. And on the exports business that had some challenges in the past year, expect a couple of those issues to get ironed out. Well, for the time being, I think we'll slip into a short break. When we come back, we'll get chatting with the management of eClothes. Stay with us.
Welcome back. A couple of Adani Group stocks are doing extremely well. So Adani Port should come up for you on your screen at the high point of trade. Giving a company at the day's high again is Adani End. Now Adani End was in the red for most part of today's trading session. Just the last few minutes, we've seen a bit of recovery from the lows. And as a result of which, the stock is mildly in the green towards the higher end of the trading range of the 1 hour that we've had. And from the broader markets, just pull up Polycab. That stock continues to surge higher and now has moved about 5% in this morning itself. Currently at the high point of trade for Polycab as well. A big recovery from the lows, currently closer to its record high for that stock. But let's get you some more ideas for profit coming in from our colleagues at Money Control Pro. Today we have Anubhav joining in with a stock that he's been tracking.
So chemical sector was contrarian bet few months back, and now as it is showing sequential improvement, our recommendation is to add more to the theme. In this context, one of our preferred pick is AMI Organics, which posted a strong sequential pickup for advanced pharmaceutical intermediates. EBITDA margin also improved on account of operating leverage. For fiscal 25, now company has enhanced growth guidance given improving global demand to 20-25% from 17 to 22% earlier. Now, the growth levers for fiscal 25 include ramp up in the execution of the Fermions contract. For the company is building up CDMO contracts, which would execute from second half of fiscal 25. Thirdly, in case of battery chemicals, commercial supply for electrolyte additives would commence from Q2 of fiscal 25. And lastly, company is in an order build-up stage for semiconductor value chain products through Baba Fine Chemicals. Now, company believes that additional growth capex of about 450 CR in fiscal 24 and 25 would deliver 2.5 times as returns at peak utilization, which is closer to historical average. While the stock trades at a multiple of 21 times fiscal year 26 estimate for EBITDA, we believe given the medium earnings growth trajectory of 20-25% CAGR, it is an interesting business to take exposure of.
Thanks a lot for that, Anubhav. Well, time to move on to our next management as promised, eClerx. That's the stock on our radar. Well, let's focus on what happened in the past quarter and what's the way ahead. We're joined by Mr. Srinivas Nadadur, the Chief Financial Officer at the company. Hi, Srinivas. Good morning and good to see you in. Well, growth slowed down a little bit in quarter four. You know, if I compare it with quarter two and quarter three levels, could you tell us any reasoning for that? And also for the last year, if you look at the dollar revenue number, it's close to around 10%. On that sort of a base, what could be the rough range we're looking at for the coming fiscal?
Right. Thank you. Thanks for having me on the show. So in Q4, we had to replace revenue from one of our clients that we lost. And that was that. And replacing that revenue, I think we've grown by about 1.5%, which I think is fairly good growth rate. And if you take that impact out, then it is comparable to what we have done in the previous couple of quarters. Your second question was on comparison between FY23 and FY24. So FY24 has been soft for most of the ITES companies, and we are no exception. The macroeconomic environment continues to be challenging. Clients are putting budgets on hold or postponing their spend. And that's the reason why there has been a slowdown in growth from FY23 to 24.
Okay. So going ahead, sir, what should the guidance be? We got what happened in the past year. But for this year, what should we be looking at? There's a bit of an uncertainty in terms of decision making. It's more postponement than cancellation. But put everything together, what is the growth number?
So we don't give guidance generally, but I would also like to use this moment to state that we've released a refresh of our strategy for the next 3-4 years. And this is based on our new CEO who was joined last year. And our focus is to grow the wallet share with existing clients. And we've been always a niche company and to focus on our niche strengths and pursue new clients and logos and expand wallet share in existing clients. So put all of these together, and I think our aspiration is to be in the top quadrant of growth and continue to have industry-leading margins. But a specific number I am unable to give you.
You did speak about margins, so let's talk about that itself. I mean, there is a wage hike which is effective 1st April. So what, according to you, could be the margin drop because of this? Even QOQ, we saw a margin drop from 23% closer to 21%. In light of this, what's your target for FY25?
So our target for FY25 for the full year is about 24 to 28% on EBITDA margin. And part of this is because of the investments that we are making in both strengthening the sales team. So we've added senior leadership in our sales teams, in our sales geographies. We are also strengthening delivery capabilities. So there's been addition of senior folks even in our delivery centers. So the full year EBITDA, we expect it to be somewhere around 24 to 28% for FY25. For FY25 Q1 in particular, because of the impact of the wage hikes, we expect the immediate drop in margin to be around somewhere around 300 basis points.
All right.
And
So for
usually
quarter one,
what happens is it kind of picks up, margins pick up from Q2 to Q4.
okay, but Srinivas, I need to ask you this. This range of this margin is very wide, right? The upper end is what you've done, 27, 28%, but the lower end is around 24%. What do you think? Will it be at the median or will it be closer to the lower end? Because this margin band is close to a 20% swing.
Yeah, so when we do our internal projections, we come up with a range which factors into account the most optimistic scenario, which is the top end, and the most pessimistic scenario, which is also the bottom end. So all things being equal, we should be somewhere in the middle of that range.
So realistically,
But
26.
it really depends on, how the investments that we are making in the sales team, how they pan out, how growth turns out. So there are a lot of uncertainties in there.
Right. So let's go with a realistic 26% for the year, given it's in the middle of your range. Attrition for most companies has come back to pre-COVID levels. For you, it's still elevated. I mean, 23%, roughly 23% in the fourth quarter. What explains that and what are you doing to stem that?
Actually, attrition for ITES companies is a lot higher than that for IT companies. And for us, 22% is actually low. So in the pre-COVID years, we used to be anywhere between 30 to 40%. So we are still a little way off in terms of the current attrition percentage, which is about 22, 23. And therefore, we are fairly in a comfortable position. So we're not overly concerned about attrition.
Srinivas, what about this split between, the focus on the top 10 clients? The top 10 clients, the growth has been good. But on the emerging clients, well, it's been lacking actually. If I look at it, it's more or less flattish. Will you mentioned earlier looking at increasing the wallet share of the existing clients, but what about new clients, emerging clients? Do you see that you could see some pickup even on that front?
Yeah, so part of our growth strategy is to focus on expanding wallet share with strategic clients and to grow and have multiple services with these smaller clients. So today our smaller clients, we have only maybe one or two services that we provide to each one of them. We need to expand the number of services that we provide to our emerging clients. And that's part of what we intend to do in the future.
Right. We have to ask you this question because this is on everyone's mind right now. The big risk that everyone has in terms of growth, ITES companies, is Gen AI. I'm sure you answered this question multiple times, but what best can you say to the street who's a little worried about medium-term growth prospects because of Gen AI?
So we look at it as an opportunity and not as a threat. And what worries us about Gen AI is not the fact that work will get automated. What worries us really is whether we will continue to stay relevant and whether we will use Gen AI in the ways that our clients will in the way that it will make sense to our clients. So it's less about being worried about Gen AI. It's more about what we can do with it. And I'm sure most other companies are also taking up a similar approach.
Good speaking to you, Srinivas. Thanks a lot for joining in. Maybe with the next time you join us, we'll nudge you a little bit more on the margin front because that band is quite wide. But as you gave us guidance, 24 to 28% for the year. First quarter, it could effectively see a drop of around 300 basis points because of the wage hike, which will be made up in the latter part of the year. It's good speaking to you, and thanks a lot for joining in here on CNBC-TV18. Well, a few stocks I just want to focus on, before we go into that snappy break. Rolex Rings, that stock is spiking away. It came out with a set of numbers over the weekend, and that stock is flying away as we speak. Another one actually is Shankara. Big underperformer that one is. They've already announced the demerger, I think, a couple of quarters or so ago. And that stock is up 6.5%. There is growth that we're seeing on both their verticals. And maybe that's one of the reasons why that stock is up and about in today's trading session. And it's a tricky space, this metal entire theme that we're talking about. In the last few minutes, you have a few stocks that's actually moved to the low point of the day. Pull up Nalco. It was well in the green. It's come off the high point of the day. Even Hindustan Copper has slipped a little bit from the day stop. So it's a tricky space. You need to be a little bit careful on that front. Slip into a short break, come back. We'll continue to focus on markets. Stay with us.
Welcome back. A couple of stocks which are on the downside this morning. We have Delivery, which is down about 9%. Nothing really, standing out in terms of great for the numbers. Nothing really bad either. There was the resignation of Sandeep Barasia, who's the Chief Business Officer. So maybe the stock's seeing a bit of a pressure out there, down about 9%. There's always supply pressure on Delivery with the kind of holdings that we have in a lot of these private equity players. But the other stock which is lower, and it's been a big mover, is Parag Milk, down about 12.5% right now. They reported their numbers as well. While, year on year it was a muted set, 1% down in terms of revenue as well as EBITDA. Quarter-on-quarter weakness is something that the street has held on to. Why is that? Because the gross margins have declined quarter-on-quarter. Milk procurement prices have seen a marginal improvement year-on-year, and that's telling you that maybe the dairy cycle could be turning. The company said that over the last few quarters, milk procurement prices have been benign. Now we expect an upward bias. So if that were to happen, so the next few quarters, we would see margins come down for not just Parag Milk, but all the other companies as well. So after a big move that we've seen over the last 12 months or so, the last 3 months have not been very good for Parag Milk. And taking note from that, pull up something like a Dodla Dairy. That stock too is down about 7%. So we'll keep an eye out on this dairy space in particular for the next few quarters, Nigel.
All right, Mangalam, also a few stocks actually from the broader markets are calling for our attention. You have Alchem Laboratories, the stock has slipped to the low point of the day. So I think that should come up for you on the screen. And Astral, that's been one of the big outperformers. But in the last few minutes, that stock as well has come in for some profit taking. It's currently moved to the low point of the day. I think the valuations are rich and the street a little bit disappointed as well in terms of those numbers, it appears. So SJVN, well, that stock is spiking away up closer around 6% as we speak. But I think we've gone on for a goodish bit. We'll wrap up on this edition of Chartbusters. You stay with us. Trading Hour comes up next.